Hi guys, welcome back to Data Trading channel. There are many nice trading strategies that sound good and make you rich, but in practice, the result is different. You work hard to know what the trend is and you know you need to stick to the trend, but you make the trade and lose. What will happen? Why exactly? Well, mostly the main reason is that your strategy is missing a fundamental part, and this is volume confirmation. Following the trend is very important, but sometimes following the trend alone is not enough. You should follow the trend only when there is enough volume in the market to sustain the trend. But how do you detect volume in the first place? Well, in this video I show you 3 volume indicators which you can use for exactly that. Before introducing indicators, let's review what volume is and why it matters. Trading volume or volume is the amount of a security or asset that has been traded in a given period of time. In the context of single stock trading on the stock exchange, volume is usually reported as the number of shares that change hands on a given day. Volume provides valuable information about the level of interest in an asset at that price level. The higher the volume in trending market, the longer the trend will last and ultimately allow your trade to turn a profit. Join me now to learn and review these 3 useful volume indicators. Third one, Heatmap volume. Type Heatmap volume and select this by the decal. As you can see, this indicator changed the color of the bars that is the same as color of histogram. This color is based on volume of the market. Click on settings. Here we see extra high, high, medium and normal thresholds for volume that can be changed, and related colors that you can see here from extra high to low. Now we can easily check our entry points with colors of candles that means market volume. Now let's check in a trading strategy. Here I added a UT bot indicator. Now you can see some buy and sell signals that are supposed to be the best points to enter the trade. I set up my UT bot indicator to get accurate signals. If you don't know how to set it up, I highly recommend you check out my other video to master this handy indicator. And also I have an EMA line set up. Now for buy position, we check buy signals that are above EMA lines and have enough volume. That means the color of histogram and candles are red, orange or yellow. Talk me in comments about your experience with these 3 indicators combination. This second indicator, volume fight indicator. Another indicator that makes you more light in the market. Now select this by shuttle club. This indicator shows bullish or bearish trends. You see green, red and gray colors. Green areas indicate bullish volume, red areas indicate bearish volume, and these gray areas are called flat areas. That means range market, and you should wait to change to red or green market. If we have difference between the bullish volume and the bearish volume, that means orders with higher prices or lower prices, we can calculate such as this indicator. Now come to check its settings. The search range shows the number of historical candles for calculation. And the smoothing for flat is an option to change the smoothing for smooth areas or gray areas. If you decrease the number, more false signals you'll get. And finally, the first indicator, volume spread analysis or VSA. This one by Kinsuki Trading. Volume spread analysis or VSA seeks to establish the cause of price movements. The cause is quite simply the imbalance between supply and demand in the market, which is created by the activity of professional operators or smart money. If you want to know more about smart money, check my video about it. VSA looks at the interrelationships between the variables on the chart in order to determine the balance of supply and demand as well as the probable near-term direction of the market. These variables are the amount of volume on a price bar, the price spread or range of that bar, and the closing price on the spread of that bar. A spread is a difference between two things. A common definition of a spread in forex trading is the difference between the bid and ask price of a pair. With these three pieces of information, probably a trained trader will clearly see if the market is in one of four market phases. 1. Accumulation. Think of it as professional buying at wholesale price. Markup, and 3. Distribution, professional selling at retail prices, or 4. Markdown. This indicator is used to identify supply and demand changes or want to know the market is driven by supply or demand. Volume always indicates the amount of activity going on, and the corresponding price spread shows that the price movement on that volume. Some technical indicators attempt to combine volume and price movement together, but this approach has its limitations. At times, the market will go up on high volume, but it can do exactly the same thing on low volume. Prices can suddenly go sideways or even fall off on exactly the same volume. So there are obviously other factors at work on a price chart. One is the law of supply and demand. This is what VSA identifies so clearly on a chart. An imbalance of supply and the market has to fall, an imbalance of demand and the market has to rise. The best trading strategy for VSA involves 4 main steps. 1. Identify an existing trend. 2. Note signs of weakness of the asset. This can be a situation where it is forming a bearish divergence pattern. 3. Wait for a confirmation that the trend is ending. 4. Use price action patterns to place a trade. As you have already seen, you can combine that indicator with EMA and UT-bot to adjust your strategy. Check this indicator and tell me how to set your strategy with it. Tell us about your results in the comment section, and also if you have any suggestions or points for others, take your comments. Thanks for watching. If you like, subscribe Data Trading channel and see my other videos.